Nompumelelo, good afternoon to you again. It's over to you.
Thanks very much, Nzinga. Well, it's getting a little bit warmer. I don't know if this is a sign of what we should expect from the budget, but it's uncomfortably warm. But anyway, to talk further about what we can expect on the budget, I'm joined in our little mini studio here by Lance Collop. He's an Associate Director at Deloitte Africa Tax and Legal, and Thabi Leoka, who is an independent economist. Thank you very much, both of you, for joining us. Thabi, ladies first, I'll start with you. There are so many pressures that the finance minister has to deal with. What are your broad expectations today?
So I do expect the usual sin tax increases. I think we've been saying as an economist that he's been between a rock and a hard place for so long. And I actually think that he's underneath the rock and the hard place. It's going to be definitely the hardest budget to deliver. We know that from the revenue side, there's very little that he can do. I don't expect an increase in VAT, and actually I think I'll be devastated if there's an increase in VAT, even though a percentage point in increase could raise about 26 billion rands. I think that he has no room to move in terms of corporate income tax, and he may move the usual income brackets, and we could see taxes being raised from there. But if you look at the expenditure side, there has been a lot of coverage on the wage increase, the wage bill, and the increases in the wages, public sector wages, which have been incredibly enormous, especially if you look at where CPI is, and also you look at the poor income growth in South Africa that has actually been slowing in the past 5 years. So it is a bit out of sync, but there's a lot of pressure from Labour not to move and not to also consolidate or shrink the public sector, which I think is needed. It will be a difficult decision for him to make, but if I was in his position, I'd make the difficult move. I also think that the expenditure cuts, he would have to actually cut maybe by 1% in terms of the allocation of funds to government departments, and there he could raise also significant amounts of monies, but on the flip side is that service delivery will be compromised.
That's a difficulty. So Thabi is using emotive language like devastated, but from your perspective as a tax person, where do you think the minister will be able to extract some revenues?
Yeah, I mean, I think it's going to be very hard for him. And I think my sense is that he's going to have to make a little compromise in many different areas. To the point on that, I mean, I think if there's an increase in that, then that will demonstrate governments that they're really in a tight spot, because I think that will be a last resort. I would imagine that the bracket creep for the higher income earners would be limited, if anything, so no inflationary adjustment. For the low income earners, there will be some relief. We may see talk about a digital tax being introduced. I think that's on the cards, and I think it's certainly in line with global trends. But I think where the minister would really do well to focus is if they could improve efficiency at SARS. I think the shortfall this year will be about 5%, 60 billion rand. And efficiency at SARS can really reduce our deficit to a large degree. So I think I would focus on SARS and creating efficiency, and also digitizing SARS. That where the revenue authorities globally are going, that has to be the trend. And I think the SARS has committed to that, and that has to be commended. And hopefully the minister will outline and talk to some of those plans in the speech today.
From your interactions with SARS, do you feel that they do have their act more together now, post the Tom Moyani years, and the fact that they've been given significant funding last year to try and boost their capacity and so on?
Yes, certainly. There's already been a change for the better. They've reinstituted the large business centre, which under the previous regime had been taken away, which really caused a lot of frustration. The reality is that we have about 300 companies in this country that have taxable income of more than 200 million. And you really need to manage them as you would manage any key customer, And so the introduction of the RBC was certainly a good move. And I think the people that they're bringing on board, recapacitating the transfer pricing team, recapacitating the ability, the customs team. I mean, those are where in a second SARS could lose hundreds of millions of rands of revenue. So those are critical interventions that have already been taken, and that should continue to be taken over the course of the next year, certainly.
Tabi, of course, today is a huge day from a markets perspective. The rand has been weakening ahead of the finance minister's budget speech. We know, of course, there's the corona stuff in the background, but to what extent do you think that has influenced the rand, that is the anticipation of the budget? And it's a double question. And then Moody's, of course, they're going to be watching closely as well. Do you think they're going to make a negative call on our rating post the budget?
Yeah, I think that it's been an unfortunate week in that equity markets globally have been in the red, mainly due to the coronavirus. And 2 days ago, we had a bloodbath in global equity markets, including our own, where even defensive stocks were also weakening. But what we do know is that now some of the inflows, especially in equity markets, have come back, but not so much in South Africa because of the anticipation of the budget. And I think that the market is expecting a very terrible budget. And also looking beyond that, which is your second question on what Moody's rating agency will do. I think the focus on Moody's is also very significant because a Moody's downgrade would mean that South Africa is officially junk status, sub-investment grade, and it would then compel those investors who only invest in investment grade to then pull out their money, and that has terrible consequences such as a weakening currency. We've been enjoying really low inflation and lower interest rates that we saw in January, and that may then change as a result of a downgrade. And the question I have, we all know this, that that we've been talking about the downgrade for quite some years, and we all, I think, understand what it would mean. My fear is that we're not talking about what we will do once we are downgraded. And I think that is the discussion that needs to be had, because that will help us get out of the downgrade sooner. So if we're not truthful in how we see ourselves, and we think that we're just going to be saved by not being downgraded and just bubble along at the bottom, we'll be very surprised and not prepared to actually do the really hard slog to get ourselves out of sub-investment grade to back into investment grade.
Scary thoughts indeed. Those were my guests, Nzinga, Lance Collop, Associate Director at Deloitte Tax and Legal, and of course Tabi Leoka, Independent Economist, raising some very interesting questions indeed. Very little wiggle room once again. That's the message coming from the experts, that Finance Minister Mboweni is indeed beneath a rock and a hard place. Tabi says he's right under the rock, bless him. But of course that's all we have for you for now. We'll have more interviews, more coverage for you as the day progresses. Back to you in studio.
Thanks, Nompumelelo, with Dr. Tabi Leoka there giving some insights into what we can expect from the budget, which is set to take place in about an hour and 18 minutes. We'll carry on giving you previews on that after a short break. Do stay with us on Point.